It's Friday, March 24th, 2023, an absolutely stunning day out here in the desert today. Nearly 80 degrees, not a cloud in the sky, absolutely gorgeous. And as we head into the weekend, more concern, more panic, more trouble for the banking system. We get word today that Deutsche Bank may be in very, very serious trouble. And as we get this news, markets across the board today close in the green. They close up, ignoring reality. These markets are so detached from reality, it's unbelievable. The markets believe that there's going to be a pivot. That's why they were up today, because they are trying to convince themselves that the Fed is going to pivot, ignoring reality, ignoring Deutsche Bank, ignoring this bank crisis that we're seeing now throughout the globe, ignoring reality, ladies and gentlemen. And they can ignore reality all that they want, but this whole house of cards is going to come down, and you better pay attention to reality. You better pay attention to what is going on. You better pay attention to where your money is at. Remember, all these banks are connected, ladies and gentlemen. We have a bank like Deutsche Bank go down. This is going to be very, very serious. CNBC, Deutsche Bank is not the next Credit Suisse, analysts say, as panic spreads. Well, that's to calm us down, that, you know, it's not going to be that bad. It's not the next Credit Suisse. No, it's probably going to be worse. One thing we have to remember is this banking panic is not over. It's just beginning. Deutsche Bank is a $1 trillion bank with huge derivative exposure. This could be an absolute nuclear domino event taking place. Who knows what we wake up to Monday morning? This implosion would eclipse Credit Suisse. They are heavily, and this is Deutsche Bank, they are heavily invested in U.S. commercial real estate. They hold anywhere from $75 to $100 trillion in derivatives. And yet they're going to try to calm us down by saying this is not the next Credit Suisse. No, this could be much, much worse. This bank goes down, this would be worse than a nuclear bomb going off. The hedge today, no reason to worry, as Deutsche Bank bloodbath reignites global bank crisis. We have the German Chancellor Olaf Scholz coming out saying that the European banking oversight is robust and stable. Deutsche Bank, he says, is very profitable, no reason to worry. The ECB's Lagarde came out. Euro banking sector is strong. ECB equipped to provide liquidity if needed. We have France's Macron come out. European banks have solid fundamentals. Now, if this doesn't reassure you, if this doesn't calm you down, if this doesn't make you feel safe, today on Twitter, Jim Cramer came out and said, your money is safe at Deutsche Bank. Listening to all this, I would be very, very worried if I had a lot of money in the bank this weekend. This, to me, when you have politicians coming out, when you have Jim Cramer coming out, you better be very, very concerned about the well-being of your money. The hedge today, Peter Schiff, more bailouts are coming down the pike. That is 100% true. I was just watching an interview with him, maybe it was yesterday, day before, where he said that most U.S. banks are technically insolvent right now. He said this is a result of a dozen years of 0% interest rates and QE, and this keeping rates too low for too long. This is what has caused the problems that we see today. This is what is causing the inflation that we see today. He says that the administration is pretending that these bank bailouts aren't going to cost anybody any money. He says it's going to cost everybody money. Everybody's bank account is now at greater risk than ever, he says. Maybe not because your bank is going to fail, but because the government isn't going to allow that to happen, but because everybody's bank account is going to lose value. Inflation is going to destroy the value of everybody's savings. And yet we still have the government willing to spend whatever it takes to print whatever it takes to bail out banks. And how in the world can you say there'll be no inflation when the government says they're going to do whatever it takes to bail out all these depositors, to bail out all these banks? You're going to see continued massive inflation in America. I just went to the store yesterday. Nothing is getting cheaper. Now they're talking about gas prices this summer exploding, and our strategic petroleum reserves. They said those reserves could take years to refill, and it's going to be so costly, and we're all going to pay the bill, ladies and gentlemen. Also on the hedge today, the Fed is pushing the accelerator and the brake pedals at the same time. They're raising rates while expanding the balance sheet, more QE at the same time. Think about that, raising rates and QE at the same time. Comment down below, what do you think the result of this is going to be? Fox Business, real estate reprieve continues as mortgage rates keep falling. You know, just the other day on CNBC, article coming out, February, home sales up 14.5%. Sounds great, looks great. You know, mortgage rates coming down. Mortgage rates, a 30-year fixed rate today is a little bit over 6.5%. Think about that. That's double, if not more than double, what it was a year ago. February sales were down over 20% year over year. It was the worst February in 10 years, and that is a fact. Yet they're telling you that, oh, mortgage rates are coming down, people are back in the market. Oh, look, they're just at 6.5, 6.6. So everybody's jumping back in the market. What a bargain, what a sale, right? A year ago they were at 3%. Now they're 6.5 plus. And it's just fascinating to watch these cheerleaders, especially these real estate agents that they have on these financial channels, you know, rooting you on to get back into the market, pay more than the house is worth, and on top of that, pay 6.5%, 7% on a mortgage. So is it really great news? Is it great news that you're paying 6.5% on an overvalued property? Absolutely not. They're just trying to sucker more people into the housing market, just like they're trying to sucker people into the stock market. Look, I believe that 6.5%, 7.5%, 8%, 9%, these are normal rates on a mortgage. What isn't normal is when a home is going up 30 or 40% year over year, and people are paying $100,000 over listing price. That's not normal. And when you slap on 6.5%, 7.5% mortgage rates to this, it makes absolutely no sense whatsoever. Unsustainable, period. Millionaire home sellers are slashing prices and sweetening deals this week in Los Angeles, according to this article, eager to sell before a new real estate tax comes into effect April 1st. This is aimed squarely at the rich. The new mansion tax will cripple real estate in Los Angeles. They're going to slap a 4% tax on properties above $5 million and a tax of 5.5% on properties over $10 million. So think about having to pay that on top of everything else you're paying, on all your closing costs and your agent fees and your taxes. Now you're going to pay a California tax of 4 to 5.5% on your mansions. Unbelievable. California just cannot chase out the money, the innovators, the business owners, the people who actually support business, the people who put people to work, the people who are responsible for job creation. You know, a lot of people might hate rich people, but those rich people bring in jobs to the state of California. They create jobs here in California. They create tax revenue. So, you know, if a rich person has 100 employees, they're all paying taxes right here in California. Well, that rich person is going to take his business and he's going to go to another state. And he's going to take the employees with him. He's going to take the tax revenue with him, and they're gone. I'm going to wrap it up today with these last two articles. Albert sent me this from Fortune magazine. It's titled, Couple Claims JP Morgan sold $10 million of their jewelry after drilling open a safe deposit box because they didn't pay their rent. I'm going to kind of just paraphrase through this article. It says that the bank mailed final notice about the renewal of 2 of the 7 safe deposit boxes that the couple began leasing in 2006. The notes warned the Arenettas, that's the couple, if the payments were not made within 60 days, JP Morgan would drill the boxes, remove the contents, and auction them. Now, here's the catch. The notices were never mailed to their home address. They were mailed to a P.O. box that the Aranettas never gave, never owned, had no association with. So JP Morgan was mailing these warnings to a P.O. box that they did not own or have any relation to. And it just reinforces what I believe and what I stress daily is if you don't hold it, you don't own it. You want to put millions of dollars of jewelry in a bank, you want to put cash in a bank, you want to put your gold and silver coins in a bank, in a safe deposit box, beware. This could happen to you. And this is not the first case. This is not the first lawsuit. This isn't the first time this has happened. This has happened numerous times. You know, take a few minutes, just Google this stuff, how many times these banks have gone in and taken people's safe deposit boxes, or people went to the bank, opened up their safe deposit boxes, and things were missing. Things were missing. Or the bank said that they had mailed the remains or the contents of these boxes to the owners, and when the owners got them, they only got half the contents of these boxes. So where did the rest of it go? So again, if you don't hold it, you don't own it. I'm going to wrap it up with this last article today. It's titled, Russia Lifts Veil on Gold Holdings. Russia's gold reserves jumped by 1 million ounces over the last year to 74.9 million ounces as of March 1st. This, according to a report done by the country's central bank. Russia's international gold reserves increased 23.6% over the past year, while the share of foreign currency decreased 71.5%. Got a little wind picking up here, I apologize. But we're going to watch Russia and other countries literally punch America in the face with these gold reserves. We're going to watch the BRIC nations, I believe, bring in new currencies backed by gold. It's all going to change, ladies and gentlemen, but we are going to watch these BRIC nations, especially Russia and China, absolutely punch America in the mouth with these gold reserves. And America is so far behind. Here's what we're doing. We're talking about banning gas stoves, okay? We're talking about banning gas stoves while we're watching these countries coming in with currencies backed by gold, new currency systems that they can trade with, the SIF system, so that they can buy and sell food and oil. They're going to trade with gold. They're going to trade with their own currencies. Saudi Arabia is saying that they're now thinking about accepting yuan, now going to compete with the dollar. This is going to be big trouble for the average person's standard of living here in America. It's going to be big trouble for your purchasing power. You are going to watch the US dollar at some point be absolutely crippled. Now, I'm not saying get rid of your dollars right now. I think you have to have them right now, but this is all coming down the pike, ladies and gentlemen. The wheels are in motion. Things are going to change here. And that's why you can't just have paper assets, dollars and stocks and bonds, all of it backed by gold, or excuse me, backed by dollars. You need real tangible assets like silver, like gold, because that is real money. Dollars, that's currency. And when you look at stocks and you look at bonds, these are all backed by dollars, paper. And what if something happens to the dollar? What happens to your stocks? What happens to your bonds? What's going to happen to gold if something happens to the dollar? Well, gold is going to go to the moon. Silver will go to the moon because it's the real money. It's the only money. So I think you have to be extremely diversified right now. I think you have to have cash and you have to have gold. I think the two things right now to have financially, besides food and water and security and essentials, is you must have cash, you must have gold. I'm going to leave it there. We'll see what we wake up to Monday morning. This banking implosion, this banking crisis, ladies and gentlemen, is far from over. They are putting a Band-Aid on a gunshot wound. Now Deutsche Bank in big trouble. They're going to do whatever they can to keep this patient alive. But at some point, what's going to happen is we're going to see big banks, multiple bigger banks, begin to implode, and they're not going to be able to save them. And this, remember, they're all connected. This is a major financial spider web. A big bank in Europe goes down, guess what? Big trouble here in the US. And these big banks in Europe, like Deutsche Bank, guess what they own a lot of? Commercial real estate. And guess what's happening in commercial real estate? Nobody's leasing this stuff. Nobody's buying this stuff. It's sitting vacant. And $100 trillion in derivatives, people have no idea what's about to happen. Be safe this weekend, ladies and gentlemen. Take a few minutes. Make sure you're preparing. Be safe out there. God bless all of you. Pray for a miracle, because we're going to need one.